Chandraprakash, you manage large and mid cap and small cap. That you kind of cover large cap, mid cap and small cap. But when it comes to funds, large and mid cap managed independently and small cap managed independently. So how one should differentiate while investing, even though it's the same fund manager, how the approaches changes in two different funds and two different mandates?
So from a fund manager perspective, it doesn't change. Meaning that both funds, we are betting on management teams running their business. We are betting on that business growing over long periods of time with free cash flow, and we are betting on re-rating of valuations. So the thought process, philosophy of investing remains the same. So from my perspective, nothing changes. Having said this, from an investor perspective, things change, things do change. Meaning that at any given point in time, different market caps or different market segments trade at different valuation levels. So for example, over the last 4-5 years, a mid-cap segment of the market has got re-rated very sharply. Small caps have also got re-rated, but there is maybe still some room to go higher. Large caps though have also re-rated, but they are far lesser from a return perspective, which means that on a relative basis, valuation differences are certainly there. For example, when you look at large caps today, within large caps, financials, which is a larger part of large caps, have given far lower returns and they trade at below average valuations today. So from an investor perspective, if I have to look at the medium to long term or the foreseeable future, I would say probably large caps have a better risk reward relative to pure mid caps today. So in that sense, since a large and mid cap would be a good way to invest rather than doing a pure mid cap investing, because it balances both portfolios. And small cap is a totally small cap dedicated fund. And as I was saying, today those small caps have got re-rated, but maybe there is, given the business profile, and a large part of small caps, by the way, is manufacturing focused businesses. And I was saying in the previous question that India has a fairly good chance in succeeding in manufacturing incrementally. So I think small caps may have some more room. So from an investor perspective, I would say that different point in time, different thought processes and or funds make sense. And there I would in fact argue that the role of an advisor like you plays a very important role, because it is you who will help an investor do asset allocation. Different market levels, an investor needs to decide different market or funds or categories of funds to allocate over a period of time. So just to summarize, from a fund manager perspective, it's the same. We manage the same thought process. But from an investor perspective, different cycles, different market periods do impact their performances.